start the recording now. This webinar is being recorded, and we will upload the recorded webinars probably tomorrow. So you can find them there if you'd like to revisit any of this. Again, as always, if you have any questions that come up while Rob is talking, please use the chat box for that, and we will definitely find time for Q&A. You want to go to the next slide for me? Thanks. So again, as always, we have been, allowed to offer double credit for attending this session. So 3 credits for this 90-minute session. But in order to get that, you need to have registered and paid for the session. You need to participate in polls and breakout room discussions, and we will have both in this session. And then you do need to complete and submit the conference survey, post-conference survey that you should receive about an hour after this session wraps up. Once all those things are done, you'll get a certificate from Brenda, and that's what you can use to submit to get your credit from DEP. Okay, next slide. Next slide, please. Thank you. All right. So I think what I'll do, Rob, is I'll let you take it from here. So let me just, thank you, Rob Sarnie, for joining us. Rob is from WPI. For those of you who may have attended our spring conference, we had one of Rob's colleagues, Joe Sarkis, talk about economic evaluations, and he did kind of a very high level introduction to that, and we got a lot of feedback that people wanted to dive in deeper and also wanted to kind of practice with it. So I'm really happy that Rob is here to kind of walk us through that, and there will definitely be some hands-on work with this. So why don't I hand it off to you, Rob? Thanks again for being here.
Excellent. Thank you, Pam. And it's great being here. Thank you for inviting me. And, for the agenda, my main goal for this is not to make you a financial analyst. It is about, I want to make you financially aware to really help you as you do your reduction in toxics, your projects, to get them approved in the company that you worked in. I'm going to give you all my tips, what I've seen, what all your stakeholders are going to be thinking about, so you can get that project approved and get it working, forever in your company. So I'm not going to go through the agenda. These are the items I'm going to hit. Now, I want to have an active dialogue. If you have any questions, you definitely throw them in the chat. Pam's my eyes and ears. She'll stop me, and we'll take pauses too to answer any questions in the chat. Or we could do it at the end. It's whatever, how you guys want to do it. But I want to have an open dialogue. That's how we're going to learn from each other. And as you're going to see when you see my background, you're not going to see chemical in there, not even once. So that's what the next slide is going to be. So I'll give a little introduction. More so, you get a little play a profile of me and what you're dealing with me. And so I'm a professor of practice. Now, I got a question for everybody. Does anyone know what a professor of practice is? Don't feel bad if you didn't. I didn't know until I applied. Anyone can just yell out if they want. Anything in the chat? Oh,
a whole lot of no's, Rob. And I
no, okay. So
although Vlad wants to know if you advise Allen Iverson.
Oh yeah, right. It's practice. Talking about practice, right? So I get it. Right. So for professor of practice means I came from industry. I do not have a PhD. Joe Sarkis, he has a PhD, right? I'm a professor of practice. I'm actually a new professor. I did it last year and now a year and a little bit. So now my background, my undergraduate is accounting and finance, and I have my MBA concentration in computer information systems. So in my career, I went from, business to technology, back and forth until more near the end. Probably out of my 31 years of working, probably 28 of them had to do with technology. So I'm really a technology guy that really knows finance. So, and that's why when I explain this, I'm going to talk about it because the toughest thing that I see in finance is all the terms, all the approaches, how people talk about it. It's really not that hard. And I'm going to try and demystify as much as possible to make it easier so you get your projects approved. So from work experience, I have not worked in a lot of companies. I've worked at a nonprofit company. Now my closest thing you're going to see from an understanding of what everyone does in this, I did work for a manufacturing company called Ionics, and they did all sorts of membrane technology. They did water purification, they did bleach, they did window washer fluid, they did in-house systems. So that it was publicly traded. Now my last 23 years in industry, I was at Fidelity Investments, and there I was a VP my last 13 years. I was in the IT area the whole time of my 23 years, but I was a project manager. I headed up a PMO. I was in strategy and planning. I did IT product line management. I talked on product model. I used to call myself the IT guy who cares. I used to speak on personal branding and mentoring, and I was a chair of a bunch of mentoring programs. So, and now I'm a WPI professor. The reason why I'm a professor, Fidelity was so good to me. I had the opportunity to go follow my passion. And this is one of my many passions. So I'm so excited. I didn't think they were going to take me as a full-time professor, but they did. So I'm real excited. So my personal life, so you can probably tell by the gray hair that I have, but I'm 54 years old, been married 29 years, 2 children, they're older. And the reason why I give that to you is because we're going to be talking about really understanding your audience and your stakeholders. And I want to have you have a good understanding of me, because you understand the angles of what I'm talking about in my background. Now, my passions, I love coaching and mentoring and the leaders of the future. That's why I love that I'm at WPI. I did that at Fidelity. And I'm a big Boston sports fan. I've been to 6 Patriots Super Bowls. I'm 4-2. Those 2 losses sting. And I was at the 2008 Celtics championship. I was at that last game, a Celtics season ticket holder. And I was at Red Sox World Series too, when they won it. Other times I've been in other things when they've lost, but I'm only talking about the stuff they've won. And I'm actually very focused. I'm a professor of finance and fintech, and fintech is really just that merge of finance and technology via innovation. So, and I work with many different fintech groups across Massachusetts and the Commonwealth and at WPI. So that gives you a little take. So I really see myself as tech fin more than fintech, but I do have that deep finance because I've supported at Fidelity every enterprise-wide system, from tax, treasury, the shareholder system, how they calculated the revenue for all the funds, all the financial reporting systems, the ERP system, the accounting, the procurement. I touched or ripped it or put it in or ripped it out of every enterprise financial system at Fidelity Investments globally. And I also supported HR systems, and I was in strategy and planning. So that's my background, where I come from. So I'm gonna bring that background as we talk about financials. So the first thing I want to highlight, because of the projects you're working on, to reduce toxins, that's what TUR is all about, and TURI. So think innovation first. So I want, and everything I'm going to say here, this is coming from the finance guy, the guy who's going to talk about finance. Do not think cost first. I see this over and over in companies. They talk about costs in the wrong ways. They either talk about it last, which is the wrong time, or they talk about it first. And that's the wrong time too. Because if you're just talking about costs, the whole conversation, I don't think you come up with the right decisions when you do that. So my recommended to you, and I'm sure you don't do this anyway, but is do not think cost first. It will hinder your thinking. It will hinder, the impact of your creative ideas. As you think through how you're going to implement it, what are you going to implement it, why you want to implement it. And we're going to get deep into the why, which helps you figure out the cost of all this stuff. So think innovation first, and ask yourself all the cost questions and what this all means, not, near the end, but not at the end. Because if you talk about it at the end of your project, and when you get all this great idea figured out and you want to go do it, and you haven't even looked at the cost yet, you don't know if this is going to cost 2 cents or $2 million. You have no idea. So you want to do it, you know, probably 3/4 of the way in. Once you really have it fleshed out, what's your innovative idea that you want to implement to help the company go to X, whatever that X is, right? Don't do it at the end. That's the wrong time, because now you might have to rework everything because it's too expensive, and you won't be able to implement it. And no one will approve it if it's too expensive. So here's my other on finance and in life. Everything in life is an investment and everything costs. And I want you to, every time you look at your project, I want you to think about it that way. I sat in the last session and you guys had some great comments to the panel members. And you asked some great questions to the panel members. And there was so many things that was in the case studies that they sent out to you. I was reading through them. I saw some costs in there, right? But there was a lot of great commentary and why they were doing it. All those things that in comments and questions I heard can be costed out, because everything in life is an investment. You might have to think hard about it. And you need to understand your cost directionally. It's not about, especially when you're figuring out your project, it's not about getting it exactly right. It's about getting it directionally right, because you've never done this before, right? So you don't know what the real costs are. You need to know your material costs, your support costs, your service costs, your time, your labor, implementation costs. What's the cost of risk? And we're going to talk about that a lot. The cost of risk is always a difficult thing. I've seen it in all the companies I've worked in. It's hard to get your arms around it, but you have to think about it. And that's really when you get the gold of what something really costs. And you really need to know where your costs are coming from. Your variable costs, what's related to the product that you're selling for your whatever company you're in. The fixed costs, the building, right? So in a brewery, right? You have the hops, you have the water, right? You have the toxic chemicals that they're using. Those are all part of the process and are associated, for those beers that are being sold either by keg or by bottle or whatever they're doing. So you can always relate that to, but there's also fixed costs. And you need to get a good look at those because you handle those differently. And we'll talk about how that impacts your financial statements too. And then you have all your overhead costs. And a lot of times when people look at their project costs, they look at the direct costs that relate to it. But projects also can cause additional overhead, additional fixed costs, and you need to keep those in mind because that will impact your company's financials differently also. Now, you really need to know your stakeholders. That is so key and critical. Now, I'm talking 360 view of your stakeholders. That's your whole company. That's all the workers. That's everybody involved, your customers. Everyone's going to care about what you implement. If they don't care, well, you need to figure that out. So who are your stakeholders? You need to really, and not all stakeholders are created equal. You're going to have to, write those down. Who's most important? Who do I really need to focus on? Do I focus on all of them? It might be. Do I focus on just a few of the key ones? And then the other ones I need to focus on secondarily. So think who they are all around your company, who's going to care internally, externally, the media, whatever it is. Because if something happens wrong or right, you want them to know about it. Now, what do they value? And we're going to have a little bit deeper slide on this. They're all going to value something a little bit differently, right? Depending on where they're coming from. Some of them might understand, chemicals really well. Some might not at all, but they'll understand why you're doing this and buy into it and agree with it. So understand what they care about and where they're coming from and what backgrounds they have. That is so critical to get your project approved and to get people behind it. And what are their risk level tolerance? Everyone doesn't, everybody, it doesn't matter what profession you're in, you all have different personal risk levels. That's based on your experience. That's based on what you've done before, your successes, your failures, because you know something that someone else doesn't. So your risk profile and tolerance level will be very different. You need to know, you really do, you need to know that risk level of your audience, of whoever you're talking about for your project and what they care about. That is so key. So we're going to be doing some polling. We actually have 4 polls here, and you're going to get one right now. And Pam, you're going to fire this up for everybody. So we just want to get a quick understanding of, and do it really quickly. I don't want you to overthink it. Quick poll of your stakeholders of who do you focus on?
Yep, I've
And
launched
Pam-
it. People should see it. So go ahead and respond to the poll. Nobody has voted yet, so I wonder, do you see it, Rob?
I do, I see it.
But nobody's voted. Okay, I'm gonna end this and I'm
How
gonna
many
start
can you
it.
pick?
No,
Can you only pick one?
we're just reading it. Just
Oh.
leave it
We need
alone.
more time. It was
Okay, I'll relaunch it. Sorry, I thought.
There's two.
It's really long.
For anybody,
There's-
yeah, for anybody who can't submit, you got to scroll down. There's a second question.
Okay,
Oh.
thank you. All right, it's going.
Interesting. Here we go.
Right, so we're watching, Rob and I are watching the results. So the first question is, whose opinions help influence decisions? And CEO and president is kind of the head of the pack, not necessarily a surprise, but also way up there are safety managers and workers and
Right.
process engineers. And then the second part of that question, which it looks like not all of you have gotten to yet, of those stakeholders, who is the most important in your company? And this is going to be an interesting one to share. So certainly we want to give everybody, looks like we just have a few more people who have yet to kind of look at it. We'll just wait a few more seconds and then we'll go ahead and end it and share the results. How's that sound?
Yep. Yeah, no, this is looking great. Yep.
Yep, this is
It's what I expected, because
Okay.
that's the way you should be thinking.
Good. So I'm going to end the poll now. Sorry about the little hiccup earlier. I'm going to end the poll and I'm going to share the results. This is cool. You want to talk about it, Rob?
Yeah, I mean, this makes a lot of sense to me, right? So obviously, it all depends how big your company is and how much money you're spending on your project. When the CEO and president cares about it, I mean, they're always going to care, but how much do they care? Probably depends on the amount. So that makes total sense. So senior management's going to really be focused on it. Your risk manager, right? Absolutely. I mean, the safety managers, because why are you even doing this? It's for safety. That's the bread and butter, right? That's the motherhood and apple pie. Quality control, I see. Yeah, workers, yeah, because you want to make sure it's a safe environment, right? Process engineers, so you can see it gets pretty evenly out there, which that's a reminder, right? That those are the people that matter. And you should always think through your project from their lens, what they care about, what they value. If you don't know, talk to them. Walk in their shoes, because that's going to make your project and understanding your costs even that much more. And as you sell it and try to get it approved, you'll be able to frame it in the right way to the right stakeholder you're talking to.
And I think it's so interesting, the second part of this question, Rob, where the stakeholder who the majority of you, and it's 30% of you, think is the most important in your company is the workers. And that is a real interesting outcome that maybe we don't always realize, we don't always think about, but really very cool. Why don't we go ahead and stop sharing this and you can move forward.
Right. And I love that viewpoint, because who's going to be implementing this? Who's going to be doing this every day? The workers. If they're not bought in on it, it's not going to work. It's not going to reap the benefits that you want it to reap, no matter how much controls you do. So you absolutely, and I think the order is right. Workers first, president second. I really do, because and you want to get that approval, but that's done after it's approved. You want to make sure that focus is there. So, excellent. That's great to see.
Yep. All right.
Okay.
I stopped sharing. Off you go.
I'm going to go to the next slide now. Okay. I talked a little bit about this, but the cost of risk, and I'm using COVID as an example, right? So, really think through, what are your risks? Why are you even want to reduce this? What are the risks associated with it? Now, it's not just the chemical risk. It's all risk involved, and we're going to get deeper into that. Who's impacted, right? It could be one or many of your stakeholders. It could be 2 or 3 levels away of an impact, right? Let's talk about the the brewery, right? If you don't have a clean process, that's going to be terrible beer. It's going to taste awful, and you're not going to get revenue. That's independent of the safeness of what you're doing. So you have to make sure that's in place. How are they impacted, right? That's very, very important, because that's going to also help you understand the value of it. What are those costs or those impacts? You got to dig a little deep. Now, I heard in the last session, people were talking about impacts, but I never saw anyone talk about a cost. It was a feeling, right? Now, all those feelings can get to be calculated. And that's when you got to dig a little deeper by understanding your data, understanding what has happened in the past from a risk standpoint. What are the costs associated with that if that risk happened, right? And that could be anything. We'll talk a little bit about this stuff later too. And there's a ripple effect. It's not just don't go one level of the impact. There can be also ripple effects after that impact, right? You could have multiple risks based on one risk. You could have a reputational risk, and all of a sudden your company has a bad reputation out there, even though you had a worker get injured based on something because it hit the papers. Who's going to buy your beer if that's going on? That they think it's an unsafe environment. Now, sustainability model. This is key, right? Because this is for thinking about, okay, you just went live with your project. You got it approved. You completed it. Now, who benefits after that fact? It's going to be one of those stakeholders probably there. It could be something a little bit different, but who benefits? Who actually pays to keep the funding model going for this project you just implemented? And how does that funding stay? Because you want to have this run forever. How do they benefit? How do they pay, right? It could be paying because they buy beer, right? It could be a different reason. What are the benefits? What are the incentives? Sometimes it's what is the incentive plan to keep this going? And I already said this, but will this work forever? Because you might get savings in the first couple of years, but you're going to get savings every single year after that? I don't know. That's part of your plan. It's not just about, you want to think this through so this lasts forever, because you could have you could implement a project, it saves you some money, and then a new CEO comes in and it's not saving the money that it did previously. Well, that could be a problem. So risk management, just to get, and you guys know what risk management is, but just as a reminder, risk management is everywhere, right? Finance, all finance is risk versus return. And risk, right? Your yield, your payment goes up with the more risk you're willing to take. And are you going to get the right return? In business, do I deliver X or Y? Right? Do I do project X or project Y? Remember, everything's an investment. They can have to make a decision. Do they do your project to reduce those toxic? Or, right, do they invest in something else, in a building or some other project that's not your project? Everything's an investment. And when you boil it down, it's about risk and return, right? Life is risk. You get up in the morning. Do I wear my mask? Do I not? Well, that's a risk assessment that you have to make every single day, depending on the situation you're in and the where you're going. And for the reduction, right, for the toxic. So do I invest in reducing that toxic X, right? That's risk management. And risk management is a process, which you can see. And that doesn't matter what type of risk it is. We're talking just about this chemical risk on the hazarded chemicals, right? You always have to, know what it is. You have to assess it. You have to treat it. You have to monitor it, not just have to go live. You have to report on it and then keep it going again and have constant improvement as you learn. And if you think about it, risk management, all it is leadership. That's all leadership does. Every day they're making risk decisions. So risk, that's why calculating your costs of those risks are so important so people can connect with it. Now, when I looked at, when I saw this right out of, the TUR techniques, right? Economic evaluation. This is the answers to the quiz. I was so pleased to see this. This is everything we're going to talk about. It's not just about the labor and the materials. Now, I thought that the previous presentations in session D, they hit the labor materials really well. But as you can see, to make up what the costs are for the economic, evaluation is a lot more than just labor and materials, right? You have you have to look at the alternatives, the capital and the equipment, right? They looked a little bit at that, but I didn't see anything on the storage and accumulation and the treatment. I saw about the disposal, but I saw a lot of questions about the process on disposals, right? In the previous session. Cost those out. What are the handling costs? Don't just stop at the things that are directly in your face. Keep looking at all around that process that's affected. Here, right? You got the laws, the regulation. What's the risk? What's the cost if you don't do this? Well, it could be a lot of money. You need to calculate that. You need to go back and look at your safety. Whether did this risk occur for this chemical? What did we pay out? Did we lose it? Worker health and safety costs. Did this worker get injured? Now they're not working. Now productivity's down. What's the loss of that? How likely is that? By us reducing this toxic, we are going to save on worker. Now, I know everyone, it's motherhood and apple pie, the worker health, but put some cost to it. So it really not only hits management or your stakeholder to like, yep, that's the right thing to do, but then also they know the costs that they're getting saved for. And what I've seen in IT, as I do IT projects, everyone looks at what the software costs. What's the maintenance cost going to be on that? Yeah, what's the implementation cost of getting consultants in? That's usually not the biggest cost. The biggest cost usually, especially in a big company, it's now you have to do all the integration. It's everything around that system you just put in. It's the training. It's the people changing their process because now they got a new system that totally re-engineers the process. So that's bigger than from a cost savings than what the savings would be for the actual implementation of that project. And you need to think beyond just the labor, the materials, in my case, in technical work, the software costs and the implementation costs. It's a lot more than that. You have insurance. Do you get to reduce your insurance? What is OSHA? What are the OSHA fines? How often are the OSHA fines? It's obviously, my guess is it depends on if OSHA thinks the company was responsible for that issue or the worker. It would be handled differently, right? Liability costs. And right now here, the loss of community goodwill, that gets into reputation. At Fidelity, they were all about the reputation risk. That was their biggest risk because they're about trust. People trust their money with Fidelity. Reputation risk was the biggest risk. And I knew that. So everything I used to wrap around, it wasn't the actual what I'm going to implement. Sure, I have to hit all those labor costs and software costs, but what's the reputational risk that this is going to save and secure for Fidelity? Same thing for your company. Reputational risk is probably one of the biggest risks if it gets out in the media that something happened at your company. So this is the answer to the quiz, even though it's all, everyone knows it. You got to think this way. It's so critical. Now, why you should care, right? Now, here's my take on all leadership, right? Just like Obi-Wan, did to Luke, right? You want to be a trusted advisor, a consultant, a leader, right? With your project. Now, because we're focused on financial data, you want to take that financial data that you calculate, because who's going to know how to calculate that better than you? I cannot calculate, even though I know what tools should happen, I cannot calculate what the operational risks are, what the actual cost would be, what's the impact it could be to the human body and what the worker health risks would be. Turn that financial data into knowledge, then into action, and then into results. And that's when you have your KPIs to track this, to show not just the first year you're saving money, but every year after that too. And you, by understanding your financials, being a leader in your company, you will be a trusted advisor if you understand your financial costs. You already know the chemical side and the risk side of all those toxic. Now you got to take it to the next level and hit them with what they value of. Now, also to get you thinking of stakeholders, right? For financial data, financial information, the CEO cares. We saw that when you did your stakeholder poll, right? The CIO, the chief risk officer, is going to care about this too, right? Especially if there's a lot of technology that deals with your operational process too. So the CIO is going to care about it because they're collecting metrics. The CFO is going to care about it. They're looking at the whole company. Same financial data, but they're all looking at it a little differently, right? Different strategic look. Your business partner, of course, they want to know to make sure that you are reducing toxic, right? Especially, right? Don't you think like the breweries, right, that are selling to the bars and to selling their kegs and to all the supermarkets, they're not going to put a product that hurts people or has toxics, involved in their process. The business partner cares about your financials too. The product manager, the project manager, they care about those costs, right? They're going to be tracking that not only to implement the project, but after from a product management standpoint. The product manager could be IPAs for a brewery. The workers, we know that. We saw that in the poll. The workers, they want to be in a safe environment. You want to motivate them. They want to make sure it's a simpler process potentially, not more complicated. And it makes it safe for them. And so they can feel proud about their organization. So knowing those financials to really explain how those costs and those risks will impact and enhance the company, which eventually enhances the workers' pay. Your finance support, get friendly with your finance folks. I don't expect you to be a finance analyst, but be tight with your finance folks. They're going to be able to, the business side, they know the finance side. They can help you think through and how to cost that and what the CFO really cares about when they see your financial, analysis of your project to get it approved. Your customers, the ones drinking beer, like you're going to talk about, that's probably getting you thirsty already, right? So the happy people drinking your beer, they're going to care, right? It's very important. Of course they care. They want to make sure that you're financially, you want to be safe, but also financially viable. Why would they buy your product thinking if you're going to go out of business? Your team implementing, your team figuring this stuff out. They care about the financials. And your manager is going to care because, right? And you're going to care too, because that's how you're going to get your bonuses. That's how you're going to get if there's share payouts, right? The company does well, you do well. And that's why you need to think it through, not just for your one department, but for the whole company and how it helps other departments. So
Rob,
there's many audiences that care so much about this.
I'm going to cut in for a really quick second.
Absolutely.
We have a comment here, a question about these costs that you're talking about. And are there databases available to help put dollars, numbers to these risks if they don't have direct costs from a specific facility?
So yes, from a historical data standpoint, but if you're you'll be able to use that historical data that your company is gathering, right? If not, then you might need to do a study externally from the company of what type of costs are out there for what you're implementing, not just the material costs, but the operational costs. Now, who's going to know the operations the best of your company? Your company. And you should know, and your finance folks, that's why get friendly with your finance folks. Understand how many claims have been paid for X insurance. What did that cost the company? What are the operational costs that we're gathering? If they do activity-based costing, like manufacturing absolutely does, and I saw it at Ionics, and then also Fidelity did activity-based costing. So then you're taking those financials and driving them to your activities, and those are so you can get a good before and after of when you implemented your project for the reduction.
That's great.
Then some of the things might be innovation. So you might have to do extra analysis and come up with your own risk, or maybe find someone who's already done this type of implementation before to learn from them. So it's going to be a combination of your historical costs and future.
So I want to just give you a little bit of a time check, but also there's another question here. What about estimates for reputation impact? That seems to be a bit hard to quantify.
Right, it is, right? So that's going to be more of if there was an impact and what's going to be the impact to that revenue. And that's where it depends on, you have to do a little scenario planning. What happens if it got out that, I'm making this up now, 3 people in your company got killed because of this toxic, that you had before? What would be the reputational risk right there? So you tell your story, and then with a range, because it is hard, it's okay to do ranges in between X and Y if it gets out. And that depends on what your stakeholder, your CEO, your CFO, what they value and what is their risk tolerance. And it really depends on the culture of your company. That's why you really need to get a beat on the risk culture of your company, of what they care about. So that is a fuzzy number, but don't leave it 0. That's what I'm saying. Do an estimate and make it conservative, and that will add to the value of your project if this happened in your company. Does that help?
Great. Yeah, no, that's helpful. Why don't you?
So at a high level, right? So here's the basic statements that they're going to hit, that they're all looking at, right? So you also want to look at your project. How does it impact sales? Are we going to be able to sell more because of this? Will our operations be quicker? So now we can get more product out the door, which means we can sell more, right? Previously in session C, I didn't see anyone talk about efficiency of the process. They talked about the material, but did they talk about, are we slower or faster with this new process? Especially the ones with the bristles, just that I remember seeing. Obviously, everyone focuses on the cost, but on what the expenses will be. I think everyone knows that. That's a no-brainer. But if you buy equipment, there's depreciation expense, right? You have to keep an eye on what the tax implications be, because if you expense something compared to capitalizing it, that's different, right? So you got to keep an eye. Your project will impact the income statement, and it'll also impact the balance sheet, especially if you're creating fixed assets. You need more equipment, right? And you got to keep an eye on lesser depreciation. You're going to get rid of the old equipment potentially, or add new equipment, or both, right? And how are they going to fund it? As we were talking with your finance person, how are they going to fund it? That's important for the liability side, which will ultimately impact the owner's equity. And they do cash flows. Your financial team does cash flow statements, absolutely, off the balance sheet and income statement, by what goes up and what goes down. You should do the same thing for your project. What's the ins and outs from the revenue to the expenses to the balance sheet? And then think that through, because that's going to help you figure out per project. So now we're going to do another quick poll. Has anyone ever done forecasting of a toxic use reduction, done a cash flow with that? It's only
This
one
should be a
question.
real quick one for folks. Have you ever been involved in developing a toxic use reduction project cash flow analysis?
Because this is the key to everything. This is the answer to the quiz on how to figure this stuff out. And
good. I'm going to go ahead and end this poll.
Yep.
And share the results. What do you know? Nope, never. Win.
Right. And the best person to do this, to at least identify where the cost and might be, is you, being the leader and understanding the chemicals and what's the impact of that. Then you might need to work with your financial or your operational people of what's the cost impact by adding something or taking something away. So that's great.
Excellent.
Okay, some tools I'm going to go through quickly, need to be aware of. Now, Joe in the spring, Joe Sarkis went through this stuff. Let's real quickly, always remember, these are fundamentals on everything in finance. So time value of money, interest, and compounded interest. You probably know that just from having a bank account, right? Compounding interest, you earn more. And you can see the big benefit of that, right? This is straight. If you don't put it anywhere, you just put it underneath your mattress. This is just straight interest. This is compounding. See how much money it makes? That's key for anything in finance. This is the fundamentals of all finance. Now, I don't like this terminology, discounting. It makes me feel like there's coupons and then there's future value. Well, that's why you need your finance people. You do the projections of the cash flow They'll do, this is real simple stuff, but they'll do this for you. Bring it back. If it's a 5-year out projection, they'll bring it back to what the value of that today is. They'll take account in inflation and everything. Same thing if you want to say, I want to make money at what this is. They can help you figure out what that rate of return for your project that you need to do. And then this is about, you're going to be doing this for all the cash flows I just talked about, depending on the time when it comes in, because you want to bring it back to your present value. So those are the fundamentals. Now, as you look at these are some of the basic ones that are used in every single financial instrument, whether you're looking at a stock or you're buying a building or you're doing a project. These are the basic financial ones that happen that, from a company standpoint, but also for your project, you might layer in the stuff I've been talking about. You might layer in additional risk. If this fails because you had a big problem, you could have big reputational risk, right? And no one will buy your product. Operations risk, implementation risk, right? Culture. Yeah, everyone said, I'm not going to work here. This place isn't safe, right? Because of your workers. Strategy. Does this fit? Innovation. And it could be any other risk, right? So this is for your project so you can figure out what the risk level is, because that's going to help you figure out what the return will be if and when you're successful. Now, Joe also probably talked about this, weighted average cost of capital. I do not want you to calculate this in the case or in anything. What this basically is saying is capital is money to fund to run your business. This is not about your sales and your revenue. This is about money from debt. Just like if you wanted to run your own business, you could get it by debt and taking out a loan, or you have investors. Well, those investors, they anticipate a certain rate of return. Otherwise, they wouldn't invest on you. Like when you watch Shark Tank, they want a certain rate of return back. That's your cost of your capital for that equity. Debt is very easy to calculate. You have a debt, you took out a loan, the interest you're going to pay is X. Great. You weight that, because that could be a 70-30 or a 30-70, it depends, right? You come up with a rate. We'll say, and the rate we're going to use in the case for the beer case is 7%. Well, if you don't make at least 7% for your company from a return on, not from return on investment, for what that yield is going to be for that project year over year. If you don't make 7%, your company loses money. It loses value. The value of the company goes down. And a lot of companies, it depends on the culture of your company. Companies should look at this because that's what it costs them to run their business, to get the capital to run their business. If they don't make that a percent, whatever that number comes out to, and it's different for every single company because everyone has a different equity. They could be on the stock market, right? They could be investors. They have different debt levels. Knowing that number, ask your finance person because that is your base level hurdle rate. That's your minimum. You better be over that. Otherwise, your project will bring your company value down. If it delivers 6%, they're going to lose 1% every single year for every dollar they spend for that project. Interesting, isn't it? So, and your finance people are calculating this. They might not tell you. Go find out what it is because that's what the CEO cares about. Now, capital budgeting, right? Hey, do I get this thing approved? It's hard. Do I give a yay or nay, right? There are 4 ways that you see, right? You probably, the one, payback, return on investment. Those are, most companies use that. That's a good one, right? That's probably motherhood and apple pie, right? Thumbs up, thumbs down. But you also need to compare. Net present value is another one. You need to understand what your company looks at. Net present value is doing the discounting to present value and minus what you spent to what you're going to get over whatever interval, say 5 years from now, that better be above 0. Otherwise, they're not going to approve it. Also, internal rate of return. That's an iterative approach. Now, software figures that out. Excel can calculate this for you. But if that's important to your company, you need to know what that internal rate of return is. And modified rate of return. All that is, and it depends on your company and your company culture. If they care about this, you got to go find out and ask. If they don't, then just go with the one that they care about. Well, modified is you're getting return every single year. Well, you're going to put that money back into the business. what's the expected rate of return on that? Well, that's usually what your cost of capital is. So that will also be an iterative process, and they'll take into account that the money you just got will go back into the company and earn X percent based on your weighted average cost of capital or whatever rate they want to use that your company uses. I'm making you finance aware to ask your finance folks, because they might be giving you a thumbs up and thumbs down. You might not know why, because they didn't share those numbers with you. Find out what those are. Those are the answers to the quiz before you even start calculating your project costs. Now, a quick poll. I just wanted to know if people, if they've ever been involved, right, with their company's decision process. Do they know it?
So I'm going ahead and launching that, and just a quick time check for you, Rob.
Yep.
So how does your company make your capital budget decisions?
Oh, seeing a little IRR in there. Little MIRR. That's good. And these are all easy to calculate via Excel. So you can do it on your own. You don't even need a finance person. But work with your finance person so they agree with you how you did it.
All right, I'm going to end the poll and share the results.
Yeah, that's great. And that makes sense. Most companies do about payback and return on investment, right? Those are critical. Those are the ones that always sinks home really well with everybody. But that's really, the finance people are looking at more, I guarantee it. They might not be telling you, so you might want to know that, right? And no idea, the ones that definitely have no idea, go talk and find out before you even start, because that is how you can get the answer to the quiz of what you need to get to, and you can stop your analysis once you know, hey, this is a no-go. Why do I even go through this process, right? Because bottom line, a company's in business to make money, right? They're not there to lose money, and they'd love to be safe and reduce toxics, but they're very focused on making money.
So
keep
for
that in mind.
those of you who said none of the above, if you could just share in the chat what your company does use when making decisions, that would be really helpful. Well, I'm going to stop the sharing the results now, and you can move on.
That'd be great. Thank you.
Mhm.
Okay, now here I talked a little bit about this already, but here's to get you thinking, right? Get you ready for the case study that we're almost there to, right? Look at your project. Will it generate more revenue? That could be for some of the reasons we just talked about, right? So you're making your production line quicker, even though you're bringing down the toxic, you're making it quicker, you're making it easier, you're making it, right? So will revenue go up? You'll sell more. Will you generate cost reductions? Maybe you'll create more costs, but you'll generate more revenue that offsets those costs. And work with your financial. You have to account for your taxes and your depreciation. Those are important, because that depends how they fund your project, because there's not unlimited money out there. And then finance can help you discount it, or you could do that in Excel if you wanted to, but I'd say work with finance on that to have them discount it back to today's dollars. Now, here's some fundamentals that you'll definitely have to do, right? That every company does. They budget on an annual basis, right? Then they track the actuals. They're going to track the actuals of your project. Same thing this is for your project. This is for your household. This is generic for everything. You want to compare your variances at the granular level that makes sense for your company. You might want to do it on labor. You might want to do it on the chemical. You might want to do it on whatever revenues or whatever it is, right? Whatever the actuals coming in. You want to assess those variances. Now this is going to go in my book when I write it, right? Remember this, there's no such thing as a good or bad variance. It's only bad if you don't understand it. You could be underspending. You're thinking, great, I'm going to come under. Well, no, that might be because you're not getting your project done in time, and you're going to actually take longer, which will be too late to actually help your revenue side of that. Or it could be, hey, you're being so efficient in this project, getting it done to get it delivered, get it done earlier, you're saving costs, then that could be a good thing, but it also could be a bad thing. It's only bad if you don't understand it. And then you always should be updating your forecast while you're implementing your project. This is not just do it once, right? And then next year do the same thing. And because things are going to change, the business is going to change. What you just implemented might change because of other reasons going on in your business from a process standpoint. So these are the fundamentals. Now, here's another quick poll. I just want to get a feel for who's been involved with budgets and forecasts. So Pam, thank you for firing it up. This is a quick one. Yes and no. They're getting easier, aren't they?
All right.
Yep. So that's good. Yep. So that's good. A lot of you have, but some of you haven't, right? So you have 30% that hasn't. Well, that's get involved, understand those, because knowing that, when I'm going to go a little bit deeper, knowing that is going to be important for you to get your project approved.
All right. And Rob, we're at 350.
350. Okay. I'm going to go through this next stage really quickly. So to really connect in for your budget and for your project, to get your project approved, you need to know the strategic goals of your company, and you want to align your project to that. Let me go back one. So know those priorities. Those are your North Star. You're going to say those priorities and how you connect with the bigger community of what you're delivering. Even though it's a reduction in toxic, you want to connect to the bigger goals for that year, and for even if it's multi-year, to those foundational, because that will sing that and connect your story of why this is important. And especially your CEO is going to love that. And they're going to instantly bucket it under, this is going to help X. You need to really understand how the data and the systems flow in your company so you can understand the multiple costs coming in. Connecting with your IT folks, know the rigor of those teams. You got to know your fundamentals of if there's multi-year planning. This might be a huge project, it might be small. If it's multi-years out, you want to know when they plan their multi-year plan, when they plan the budget, right? When do they approve it? The forecasting of that, right? When do those come in? Know those details. The actuals coming in, and then is estimate at complete. You probably all, because if you're in a manufacturing type area, that's a combination of the actuals that have already happened to the forecast of that's remaining to deliver your project before it goes live. Very important. And you need to set this all up so it flows like water. So it's not a lot of extra effort, because if you don't have access to these costs, I guarantee senior management is seeing the cost of your project, and they also know what you're spending and where they're spending it. I guarantee it. So, and if you don't know about what they know, you're already a step behind them when they ask you questions, right? For all your costs. And you got to know the timelines. When are these? Because sometimes timing's everything. You might miss the annual budget process. Typically, May to July for multi-year planning, you get your August, September budgets, right? Every business is a little different, right? Depends on their fiscal year. You know, you set up your project to get it going. You get your tracking, right? Quarter reporting to senior management. You got to know all that stuff. But also be prepared. Things will change because emergencies happen. And that might be your opportunity to jump into a project, or your project might get canceled because of something else, like COVID happened. And then you better know your details. Better know who's going to know the details better than you. It's your project, right? Consistency, how you report those and talk about those costs are important across the company. So it resonates with all the stakeholders that you talk with. Know your rates. They're going to ask you, know the scope of your project in case you have to change that scope because you want to get it in at a certain time. Know when the deliveries are happening, when things are going to happen are so important, right? And because you're going to get questioned. So now we're going to get into the interactive group work.
Right.
You guys
So
ready? You guys already did your pre-work. You're probably all thirsty, ready to talk about beer.
So
To
I'm
practice.
going to go ahead and share in the chat the next slides. You have the slides? And then,
Yes.
great.
So here's when I give you all a topic. We're going to break you up into teams. I'm going to walk you through this step by step so you know. And this is what Pam is uploading, is exactly these next 3 slides I'm going to walk you through. So you should download those and have those when I'm going to move you in the breakout rooms, and you're going to look at those and use those as a reminder. Because once you leave the breakout room, once you leave the main room into a breakout room, you can't see my deck anymore. So here's what we're going to do, right? So we're going to break out. You're randomly going to get broken out into an executive leadership team. You're going to assess what you did your homework on, right? For brewing, the industry. You only have 10 minutes. You'll have 9 minutes, and then the counter, then we'll have a 60-second counter.
Yep.
Keep that in mind. You only have 10 minutes. That's why I gave you the pre-work, so you can be ready to have great dialogue with your leadership team. So we have, what do we have? We have 80 or so people. So we'll have, probably, let's say 9. We'll already have 9 per team, right? To work as a team. So we're gonna
Yeah,
have
we're
9
like
teams.
between 6 and 8 people per group.
Oh,
But yeah,
Gotcha. Thank you.
Yep.
Excellent. So we'll have about that many. So you're all getting it randomly. So there are 3 important links that you already saw. This was for the pre-work, right? This is just a reminder of that.
Mhm.
Excellent. So now the process, you're gonna get broken out into 9 groups. There's only gonna be 3 topics. And the next page, I'm gonna say what breakout rooms, because you're gonna breakout room 1 to 9, you're gonna have a different topic. But 3 groups are gonna talk about the same topic. You have 10 minutes to talk about it. 9 minutes and a 60-second counter. Pull out your pre-work if you have it and your notes. Once you get into that room, start thinking through who's the leader, who's the note taker, who wants to be the presenter, because you're going to come back and present. When you're in the room, you can share a screen. That's probably a good idea. If someone's taking notes or if they're building a quick little deck of bullets, don't get too deep. Write your bullets, get your thoughts down, because I want to hear. Because within 2 minutes left, start planning how you're going to do your presentation, who's going to talk to what. And one group out of the 3 will get picked to have 5 minutes to talk about in their bullet points what they talked about. And I want to hear what was hard, what was easy. And here's my tip to you. And I say this all the time: be brief, be brilliant, and be gone. And that doesn't mean yes or no with your answers. You still want to be brilliant, but I learned this at Fidelity from executive leadership training. That's how you deliver your messages, the 3 Bs. Now, the other groups on the same topic, they'll get to bring up one thing that maybe the team that presented didn't say. So every team will get a chance to say something, but only one team will have the full 5 minutes. You'll get a minute or so to say the one point that you thought was critical that other team missed. So that's what you're going to be doing in your team. Now, here's a little bit more now. Here are your questions for groups 1 through 3. And Pam's going to, when she fires up the breakout rooms, and this is going to, that's why you need a download, because you're going to talk about this. And I'm not going to read these. And I'm going to pop into each of the breakout rooms and ask if you have any questions for me on how to approach some of this stuff.
And I've titled each of the rooms, room 1, 7% hurdle rate. Rooms 1 through 3 have that little hint. And so each of the rooms has a little hint in the name of the room. So hopefully that will help.
Yep. And the number will help you too. So those are the 3 topics, and you're all going to report out. So, and then we're also going to talk about it. Are you guys ready?
Yes, they're ready.
They're ready to rock and roll. They're ready to be
executives.
executives and talk about beer and how to help their company, reduce that those toxics.
Okay.
Okay.
So, and
Okay,
if
fire it up, Pam.
I'm firing it up, and anybody who wasn't able to download that, don't worry. I'm sure somebody in your group will have been able to. So I'm going to open the breakout rooms now. Okay. And I'm going to stop recording. Okay, we're recording.
Pam screwed up.
Oh, it's on record. Literally.
Okay, how are we doing? Is everybody back?
We got 68.
And we have everybody back in the room? I think we do. Okay, all right. Well, Rob, off you go.
Okay, so hey, well, I want to hear your group's presentation. Now, I know this was frustrating. That was the point. So this stuff is hard, isn't it? Right? But to get your project approved, you got to dig deep. Now, you only had 10 minutes, so that's why it was, frantic. You'll have more than 10 minutes in the real world, right? That's why I wanted people to do a little pre-work so they could at least understand the fundamentals of not of what they had to do, but what the case was. Now, if you notice, right, there was a lot of things missing. It was hard. Well, that's the real world. You got to go dig and figure that out. It's hard, right? So otherwise, it wouldn't be, if it was easy, right? Everyone would have already done it already. You're going to be doing it for the first time in your company. So now, so Pam, I'm going to let you, we're going to hear from, we're going to pick one group from 1, 2, and 3. Pam, who do you want? You pick the number. Who do you want?
I'm gonna
present?
pick group 3 to share what they talked about.
Group 3. Now, group 3, do you want me to stop sharing? Do you want to share anything? Or do you want to leave up what I have up here?
Is group 3739?
No, group 3 is group 1, 2, or 3. See the
Oh, I
first
see,
question.
okay. Oh, I see. Okay.
So that was your group, Bill. Yeah, are you presenting?
Yes, and unfortunately, we don't have a whole lot to present. What we
That's
determined
okay.
was the same thing that you discussed, Robert, that there's a whole lot of information missing. Being a tour planner and a chemist, I'm not as much of a financial guy, not even close, as more chemistry related. So
Yep.
I spent most of my time going through the documents, especially the TUR report 2020, looking at those tables and all the other information there. So we kept asking each other in the beginning, what exactly is a hurdle rate? And what are we trying to define with that hurdle rate? And so we looked back at the tables for the expenses and we said, well, there's a lot of information that's missing here. We feel like we would need to make an intelligent decision and a presentation. And just from hold your thumb up, squint your eyes, 7% seemed really high to all of us.
Real? Okay, good. Now, if you were CEO, based on the information, if you were CEO and you got presented that cost data, right? Would you approve that? Would you
No.
approved it?
No.
No,
There's
right?
too much information missing.
Right. Now, there's way too much, right? So, and 7%, right? That the hurdle rate is the one that you have to at least return 7%.
Okay.
Now, so that was one of the points with this question. So you did nail it, right? Because you're going to have to do a lot more digging before that CEO knows how this is going to impact my company in whatever way. Now, it did have, now you having that chemical background, right? You know what the risks are. You just have to go that next step. What is the impact if that risk occurs? Who will get injured? What will happen to the company reputation, right? If something X happened, that's the additional research that will really resonate with the CEO. And why would he approve it? Because not just because it makes the worker safe. You could have looked at, right? There were so many incidents because of this, hazardous chemical. Go back and talk to the chief risk officer. How many times and what did we pay in fines or in fees, or how much downtime we had of that employee because they got injured because of this chemical? And if that happens again, that will cost X. And it could be OSHA, right? If it wasn't the worker's fault, it was the company's fault because of this chemical. Now that's a fine. That's another cost because if you're going to reduce that cost, that fine will go down to 0 in future years. So you're saving, and you look back from a historical standpoint, how often does that happen? Might happen once a year, might happen once every 3 years. I don't know, but I don't know how much that. So talking with your safety and your insurance person and your finance person, that's an additional big cost that's not mentioned in there. And then it didn't get into the operational stuff, right? So how does this, by changing out to a non-toxic, right, cleaner or sanitizer, does that make the process more efficient? I like the questions I heard in the previous session. What happens with the disposal? I don't know. It didn't say, right? It didn't say in this case. So all those great questions I heard from this crowd, ask those same questions, figure out what the costs are, and go not just write what's in front of your face, what's a couple steps later, right? Like the disposal. Well, what's the impact of that disposal, right? What does it impact the environment that you do today? You got the before and after, right? You're always doing a comparison. And every year you'll be saving that once you figure out what that cost is. And that, I bet you those costs are more than anything from an operational standpoint. right? It could be more, it could be less. You got to do the analysis. It depends on,
Well, workers' comp can be, my experience from industry, one I inherited when I got into industry, was over $300,000 a year for the 5 years I was at that company. That's a whole lot of money.
think about that, right? Do it, take a percentage of that based on you reducing that, right? Put that into your project, right? If you're making it safer for the workers, well, take credit for that financially to go the extra step. And exactly. So you know how people are going to get hurt. Well, what's the impact of the company if that person gets hurt, that worker, right? And there's other things, operational, reputational, right? And you don't want to go too crazy, but you want to be able to know what resonates.
So
So that's
Rob,
great.
I'm
Thank you.
gonna suggest that we talk to the next group rather than some of the feedback, because
Okay.
we've got like 15 minutes left.
Excellent. No, thank you, Pam. Okay,
So
for group 4 through 6, what do you think, Pam? You're picking.
I'm picking group 4, only because I
Four,
talked
you're up.
on them.
What are the top 10 risks? What keeps you up at night as an
So
executive?
who is in
management
room
team?
4?
This is Patty Gallagher. I took the notes so I can just go through them.
Excellent.
Awesome. Thank you, Patty.
So the list that we have is product quality, regulatory issues, employee safety, company reputation, contaminated batch such as toxic, either by toxic chemical or microbial, if it's not cleaned properly, FDA risk of not passing inspections, risk to equipment or the long-term effects of harsh chemicals on the equipment. And then the storage, we have chemical storage, process safety, or storage safety.
Wow, I think you got 10.
So-
Did you get 10?
Well, a couple, I think we did get 10, but I added like 2 of them were kind of combined, but I would
That's
say
okay.
yes,
That's
overall
great.
there's 10.
Great job. I picked 10 just to think you never get there. That's awesome. Now, would that help or hurt your project? Though, if to help get project funding?
Well, I think if you quantify the costs, or like you said, cost avoidance, like the workers' comp or chemicals on the equipment or the loss to reputation, then that would be, those would be the things that you could put in there, that it would be, I guess it's not a good thing, right? If those things were not proper.
And did you talk about your stakeholders too, what they value? Some of those stakeholders that you thought were important? Because some of those risks might hit them, right in the gut. And you got them hooked. And now you're saying, not only are we going to
Yeah.
reduce this risk, we're going to save money in this risk.
Right. So if you look at contamination or product quality or FDA, obviously that would be a quality manager or quality assurance group. You'd
Yep.
have your employee safety, which would be your EHS group, along with regulatory issues possibly. And then risk to equipment or damage to equipment obviously would be more of a financial impact. And then you have marketing and PR, which would be your company reputation and sales.
That's great. That's right. That's the right. So that's the process you have to do. You guys nailed it. That was awesome, right? And you just did that in 10 minutes. Imagine if you spent a half hour. That's awesome. That's great. Great
Yeah.
job.
Great, thank you. All right, so why don't we move to room 8 to talk about the missing costs that you guys identified.
You guys got a layup. I'm only kidding. I'm joking.
We've already talked about it a bit, but who is in room 8? Who'd be ready to kind of talk about?
I can talk. It's Daryl.
Thanks, Daryl.
So we talked about there were a lot of costs that were missing that would impact our decision. With particularly the ECA, there was equipment costs. You had to purchase additional equipment. So there was the cost of the equipment, utility costs, and installation costs. There wasn't any indication on if the handling would require any type of PPE change up or down that could impact cost as well as impact to workers on their workers' health. It didn't let you know if changing to any of these solutions would take longer to clean the vats, less time to clean the vats, which could impact your utilization rate of those vats and how much product you could potentially produce. Also, wastewater reductions. Several of the cleaners did go to wastewater treatment plants. And if you had a large enough plant, that might cause some wastewater treatment reduction, chemical costs coming down because you may not need to neutralize as much. You also don't have the comparison of the cost for the footprint that may be required for the equipment compared to using that same like square footage in the space for another vat that could produce product that could be sold. There was also labor costs. Does it take more labor to set up, clean, and handle this compared to the existing systems? Because that would have to factor into overall. And then is there any impacts to the quality or the taste of the product? Because that will certainly impact sales and revenue. So that's an area that would need to be reviewed and see how that works out.
See, that's great analysis. Awesome job. Very, very nice. So, I mean, and that's from that case study, right? So you could see how much was in there, but you could see how much is not in there. And you could see that even from that session C, right? They had great costs in there. Don't get me wrong. They did great analysis, but they could have taken it even further and had even more payback, right? On the stuff that you heard just in the last C session. So great job, everybody. I'm really impressed.
Yeah, I agree. And it's interesting to your point about how much information was presented. First of all, that we were well aware that this alternatives assessment didn't have a full-blown cost analysis. So it was a good exercise for this. But I just want to point out that in one of our polls, we asked how decisions are made, and several of our people said, because the decision makers want to. So sometimes, having a sense of what that person's values are and what matters to them is more important than figuring out what the hurdle rate is and calculating it out. So I'm just really impressed with the kind of the qualitative analysis that our group did, and understanding that quantitative bit, as you say, go to your financial people.
And the value part and really understanding your stakeholders, and they call it, hit them in the pencils, right? Hit them in the pencils, the stuff that they write down and care about. That's what by knowing that, and you might do less or more based on the culture of that company and what they care about. So I did a quick analysis, and I'll show you what I came up with. So here's what I did, and I'm not a chemical. I came up, so I use my IT background on how I'd get my arms around. Okay, I figured there's going to be, I've never done this before, so I'm going to bring in a couple consultants. That's going to cost me money, right? I had a rate, right? I have the hourly rate of $150, right? So I figured, I'm going to need 2 consultants probably. So I did a little estimate, and these are just made up costs. But you can see it's more about look at this. So there's a lot of research. I have to research a solution, the market. What's the market care about, right? Maybe I can say we're green. That might help my sales. Vendor analysis, right? I don't want to go with a jerk vendor. I want to go with one that's quality, right? So, and I'm going to be moving from the one who gives me my toxic chemical. Safety analysis is big. Operation, right? We talk about equipment analysis, right? What's going to get refitted, disposed, right? Depreciation, all this stuff. Testing process, right? You're going to have to test. I'm saying 10 rounds of testing. I don't know. I just made that up. So I have, if you notice, I have labor and cost where appropriate, but this is just the analysis of how we're going to do this stuff. This is more the implementation of it. Training program, right? You have OSHA fines analysis, right? I love the workers' comp one. That's great. That's not in here. I didn't put that in there. You have to dispose of the equipment and disposal of like all the questions were. Then you have materials, equipment, and planning, right? No, you're going to, new materials. You have to test and pilot them, right? I think I have, I'm going to do 10 rounds of testing, right? So that's going to, it's going to cost money for the materials. Change management. We're changing things. How are you going to communicate that? You got to think that through. Not only communicate it internally, but externally to let the world know, hey, we're going to be safer, or whatever we're trying to do, whatever the key thing that goes with your mission statement for your company. You might have to update your piping and your instruments, right? All your plans all the diagrams, right? I'll install that stuff, communication plan, execution, new equipment costs, advertising. You might want to do advertising, and you might have to shut down parts of your brewery, right? Because you can't just do it or take it all down for a few days and redo it all, but you might want to phase it in. That depends on the implementation. So I just came up with a high level. Here's a good thing. If it's something you've never done before, I threw in a 20% contingency. And if you don't spend it, you look like a hero. And you can tell your senior management, I got a 20% contingency. Have you done this before? I haven't. Let's put that in to make sure. Now, you can take that away if they say, no, take it out. Okay. But you're telling them that's a risk. I'm telling you right now, that's a risk because we are not experts at this. But I threw in a 20%. Then I come up with almost $1 million. And then I did this cost this is the analysis. Then at a high level, the before and after, I didn't go into detail, I didn't have time, but I just said increased revenue, projected cost savings. Now there's going to be puts and takes, and I did it for a 4-year window, and I calculated what the payback is, internal rate of return, modified, and net present value, right? Of how much that would be. And that was just quick Excel. But you can see once you get this through and go do the analysis, and the analysis will take time. That will cost. That's not for free. That's part of your cost. Then, and then plan and get your equipment. And then after you go live, this is the after you go live approach.
So
It's gonna
Rob, I
take a little
just
while.
I just shared this slide on the chat for anybody who wants to download it. And we'll also make sure that that's on our website if people want to go back and just kind of look at Rob's quick and dirty, but quite in-depth analysis.
And I don't even know what I'm talking about, right? I use my IT background of projects that I've done.
All I know is I saw some smiles when you covered the consultant rate.
Yeah, happens in IT, especially if you've never done it before. So that's my quick take, right? And once it's in your ballparking, you're not getting an exact. You're just going to get approval, right? And that's why I put the contingency in there, because I ballparked. Pace over perfection, because time is money. You want to get that estimate done so you can get the project started based on the cycles of your company. So that's pretty much it.
That's great. Rob, thank you so much. There were a few questions in the chat that I want to get to.
Awesome.
I just want to point out, Charlie Flanagan made a really good point, and isn't one of the biggest missing items the volume of beer over which we amortize the cost of equipment and direct costs?
No, absolutely. Absolutely, right? I mean, you get the depreciation side of it, the amortization, yeah, but that's where your finance folks help you with what was going on there and what they have on the books. That's why you got to get tight with your finance folks. It's not your job to figure this all out. It's your job because you know the operations and you know the chemicals. Then you have to ask a lot of questions that people that have the data, so then you can leverage that data to what makes reasonable sense to what you know from it. And you might have to deal with your operations folks too, because they'll know if something gets quicker or slower based on that. And talk to your procurement folks. So it takes a village to figure this out and to do it right. But then you'll be really giving your company the right payback and return on investment and all the other, IRR and MIRR and all that stuff too, if that's what your company cares about. That depends.
Daryl shared that getting quotes from facilities is key. She had somebody who put in a $10,000 request, and the facilities cost in the end brought it up to $150,000. So understanding what the impact on your facilities is, really understanding your own facility and what costs matter is important. So is there anybody who would like to pose a question to Rob? We're at 4:30, and so I understand that, if anybody wants to leave, that's fine, but Rob is here, so if you have a question, feel free to unmute yourself and ask. Not hearing anything, Rob. So
Okay.
thank you so much. This was a really fun deeper dive into understanding how best to get, to get to implementation and to understand what the cost implications are. And we know that this is one of the more challenging aspects of toxic waste reduction planning. So I really appreciate your time, and appreciate everybody really kind of like diving into the breakout discussions and sharing. I think it was a very good way to wrap up our conference. So you can look for in about an hour the survey. Please do let me know if by the end of the day you haven't gotten the survey, and I'll make sure that you get it. And again, thank you, Rob, very much for joining us. It was
Oh,
really
thank you,
fun.
Pam. Thank you, everybody. If you have any questions for me, you can email me. It's on the slide. Connect with me on LinkedIn if you want. If you have any follow-up questions, I'm here to help. And hopefully this takes you to infinity and beyond. That's what I'm hoping.
Rob, I don't really have a question, but I just wanted to say thank you. This was a very exciting presentation. I think your energy was really great. So I just wanted to thank you.
Wow, from a chemical engineer, finance was exciting. That's awesome. That should be quotes someplace on the
Oh,
thing, I think.
Thank you so much, Rob.
Hey, thank you.
It
Thank you
helps
so
to
much.
have the Boston accent too. Thank you.
Yeah. That's right. I'm born and bred, as you can tell.
Yeah.
Okay, thanks, everybody. I
Okay.
appreciate it.
Bye. Thank you, everybody.